Hey everyone, today on the podcast we're joined by Tom Chippas, the CEO of ErisX, a repeat guest of the podcast, as well as Chris Isaacson, EVP and Chief Operating Officer at Cboe Global Markets. This is a very exciting episode because we are announcing that CBOE has acquired ErisX. We're going to get into the details of the transaction, what it means for the industry, and get Chris's and Tom's perspectives on the go-forward plan. So without further ado, here's my conversation with Tom Chippas and Chris Isaacson.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion and all of a sudden people start to worry. So out of this worry, we have something called the Bitcoin.
Okay, so this is a very exciting episode of On the Brink. I think it's the first one where we're announcing a transaction. We're joined by Tom Chippas. He's the CEO of ErisX, as well as Chris Isaacson from CBOE. Chris, you have not been on this podcast, so maybe before we get into the exciting details, would love to hear your quick introduction.
Yeah, great. Thanks, Matt, for having us on. Very exciting to be on with Tom and yourself this morning. Yeah, so I'm Chris Isaacson, Chief Operating Officer of Cboe Global Markets, the founder of the listed options market in the U.S. I was originally one of the founding employees of BATS Global Markets, and then came to Cboe Global Markets in 2017 as part of that transaction and integrated the two companies, and now very excited about the transaction that we'll talk about today with ErisX.
And Chris, I always ask people how they got into crypto, so I won't let you off the hook here, even though you're coming on with some exciting news. But how did crypto assets get on your radar, both personally and professionally?
Well, personally and professionally, they both came actually about the same time when Cboe was actually the first exchange to have a cash-settled Bitcoin future that we launched on our Cboe Futures Exchange. And that was back in late 2018, so right before the CME did. So about the same time as when really took up interest both personally and professionally.
So you weren't one of these guys that was on the Silk Road in Mt. Gox. We get some of those stories. Sounds like it was a little bit of a different journey.
I don't know. I was not.
Well, this is an exciting day. So Chris, why don't we start off with you, and maybe you could summarize the transaction that you've announced this morning.
Yeah, I'm super excited to have this transaction announced. Been very excited about to join with Tom and team at ErisX. Why we're excited about this transaction is that Cboe has historically been, we have 21 markets around the world trading equities, options, futures, FX, all over the world. But we have, as I said, we did have a cash settled Bitcoin future back in 2018. We actually stopped trading that in the last year or so. Needed to go back to the drawing board, as we've had the pattern of doing at Cboe. Why we're excited about this is because with a single step, with the purchase of ErisX and Tom and the team coming on, we have in one step being able to get into spot crypto, data, derivatives, and clearing. And what Tom and team have built is tremendous. We think those that are going to embrace regulation in this space and help define this new asset class in somewhat similar ways to other asset classes we're already in, but also recognizing how it's different and nuanced, will be ultimately successful. We also have a long history of dealing with regulators in all sorts of jurisdictions all over the world. And clearly right now, where crypto is at is trying to find its footing and become a legitimate asset class in so many ways. So it's very exciting, given what Tom and team have built, to be announcing this today.
Well, it's certainly a legitimizing just step forward for the industry to have CBOE hop in so aggressively here. Tom Chippas, from your perspective, why did this combination make sense? And talk a little bit about the transaction from your side.
Sure. Thanks, Matt. And great to be back on again. Thanks for having us. From our perspective, much of what Chris said is sort of the opposite side of the coin, right? We've been cranking away for 3 years. And when I think about the vision for ErisX, when we first put the company together and launched, it's always been about innovating within the market structure and regulation and trying to create an environment where more traditional providers of financial services, those that provide access to products for trading, those that provide investment management services, et cetera, could get in and offer crypto products to their customers. And if you look back from 2018 to now, that thesis has played out. Maybe not exactly on the time frame we had thought when we launched the company and we first launched our spot market back in April of 2019, but we're here today. And the foundational elements of our regulatory structure, all the licenses that we have, our technology and operations and the people have really come together to build a platform that we think is really what the market's looking for. And by joining in this transaction with Cboe, we now are part of a firm that is global and innovative in the exchange space, that is looking to capitalize on the previous experience and expand into crypto and really offer that combination of spot and derivatives in a cleared platform that they know the market's looking for. We know the market's been looking for, and now we're just aligned with a bigger, more powerful organization that shares that vision.
That's super exciting. I mean, I remember back to 2014, 15 when I was working at Fidelity, and we were looking at this through the context of what could you do from an institutional perspective in the crypto market. And we looked at it and said, all right, well, you don't have qualified custodians, so you can't hold it anywhere. You don't have trade execution platforms that you can trust, and you don't even know what the price of the asset is. So you probably can't do too much. But when I look at this ErisX Cboe combination, there's a lot that unfolds from a market structure perspective that kind of gets unlocked for more than just you guys. So maybe you could both give a little bit of perspective on what that market structure unlock really is.
And I remember seeing you in that office there, Matt, at Fidelity, and being able to pay with Bitcoin in the cafeteria, I think back then at the Fidelity commissary. I remember that was
That's right.
I don't know if anybody actually did, but I remember it was a payment option when I grabbed
some expensive coffees.
Very expensive coffee. So I think, let's first think about the market structure, right? Obviously, the hot topic today and this week has been about ETFs and what have you, and those are really access products. So access really defines a lot of what we think about. How do the various folks that want to deploy capital into acquiring crypto assets do that? Today, there's obviously making purchases directly on a centralized exchange. There's the ability to transact where you can in decentralized exchanges. There's peer-to-peer transactions. There's reward programs. There's really no lack of ways for people to get exposure, but none of those ways really have functioned in the traditional sense where, hey, I have a portfolio of assets. And within that portfolio of assets, whether I'm an individual, whether I'm a registered investment advisor, I'm a retirement advisor, or I am, operating a fund structure, I'm probably doing something more than simply investing in a single asset. So today, when you think about individuals engaged in the marketplace, they tend to do that through intermediaries. And that's not because intermediaries are the only way to do things, but intermediaries provide a value-added service. If I want to buy some equities and I want to rebalance my bond portfolio, and I also want to open up a retirement account, a college savings account, what have you, you go to one of these intermediaries, a broker-dealer typically, and those folks provide you those services and tools you need to do that conveniently. Those folks need some clarity, and that clarity is some of the things you mentioned at the onset that were missing back in the Bitcoin for coffee Fidelity days you were mentioning, right? Which is, hey, where can these assets be safely held? What can I as an intermediary do? What are my obligations if I'm an FCM to offer physically settled Bitcoin derivatives, what have you? Many of these things we've certainly worked very hard at ErisX to clarify over the last few years. Fall of last year, we worked really hard with the CFTC and helped to get clarification on what can an FCM do when it comes to physically backed Bitcoin contracts. And we got that clarity out of the CFTC, and I think that's been really helpful to the FCM community. We know there's an active debate and dialogue going on with the SEC and in Congress about what does custody and good control mean. We also know that many broker-dealers today are part of BHC, FHC, bank holding company, financial holding company groups. And within those constructs, they need some clarity from the Fed about whether or not they can offer these products. So all these are good questions that actually have good answers, but taken together, this is market structure. It's not just about having inventory and a matching engine and fiat rails. You have to answer these other questions, and you have to answer them with respect to the intermediary or counterpart that wants to participate in your market. I think we have good answers for a lot of these questions at ErisX, and Cboe has a great track record of innovating a product here and working constructively with regulators so we can help fill the gaps where those gaps exist.
And Chris, what would you add to that? And I'd be particularly keen on getting your sense of just the regulatory enablement side of this as well as the market structure side.
Yeah, I think, as we looked at the crypto space or digital asset space overall, I think what we see is, despite all the good innovation that's happened and how much uptake there's been around the world, there remains a trust, transparency, and data gap that we want to fill here with this transaction. And that's in consultation and working with the regulators. And Tom and team did a great job of setting up, designated clearing organization, designated contract market with the CFTC, embracing regulation where required and where needed. That was actually part of our diligence here as part of the transaction. It's just what sort of relationships does ErisX have with regulators, which is very positive. We view this as, a great transaction because we can add further product. Tom mentioned that Cboe has a long history of innovative products, and we think, something missing in this space is potentially, margin futures, further derivatives like options, but based on physically settled, based on the actual underlying. So, and we have a ton of experience at Cboe in creating derivatives in ways that are efficient and transparent and trustworthy for customers and investors.
That makes a ton of sense. And Chris, as you know, a lot of the early crypto exchanges really started as just web interfaces, just kind of online offshore brokerages, really in the early days of the industry. Obviously, that was never going to scale to institutional capacity. And so how do you guys think about technology and the aspects of integrating some of the crypto native sides of the technology into CBOE on a go forward basis?
Well, again, that's one of the great parts of this combination, I think, is that Tom and team from the beginning brought the history that many of them had in other asset classes with needing institutional grade systems and technology, but then building the platform so that it is crypto native with the matching engine and clearing and fully funded futures being it being completely connected in the way they've built the technology, but at scale. As you said, a lot of these exchanges started out as websites and now have needed to upgrade in many ways, and some to a lesser degree than others have, but didn't build from the ground up, understanding what institutions would require, what sort of requirements are needed technically. So what we found through diligence, and not surprising, is that ErisX is built in a tremendous technical foundation that is crypto native in the way that it's built, that will allow us to scale this business as we bring on partners that are very excited to join us.
Tom, I get a chuckle out of this because I think you and I have been talking about institutional adoption for crypto assets dating back to the 2014.
It's coming, Matt. It's a wave and a wall.
Yeah,
it's coming.
It's been coming for a long time, and I think a lot of people in the industry have just started to not think it's coming and just focus on the retail. But I guess the question is, why now? And talk maybe a little bit about the institutional interest that we're seeing just in the broader market and how that's growing.
Yeah, a little bit is the classical frog boiling in the pot analogy, right? It isn't a wall or a wave is where I've arrived. It's happening. It's just happening. And I know it's very popular in sort of crypto Twitter circles, the gradually then suddenly conversation, right? And I think we've hit that tipping point where all the effort and everything that's been happening has been moving to this point where it's just obvious that now institutions are coming in. And it maybe wasn't obvious 18 months ago or even a year ago, but I certainly know from our conversations and the folks that have come onto our platform and the conversations we've been having that it's been happening. And certainly some things are more public than others with respect to new fund launches, with respect to corporates putting Bitcoin on their balance sheet, and then even sovereign nations adopting Bitcoin as acceptable tender for transactions. So I think the now is really a culmination of many things. It's one, just the overwhelming desire for individuals to get exposure in that way I've described as part of a multi-asset portfolio and investment strategy. It is the fantastic progress that we've seen on the regulatory side, whether it's things happening at the state level, as we've seen, in Wyoming, or whether it's things happening in Congress with Cynthia Lumens and others pushing forward the conversation around these, or even to the extent that I realize this, some people may disagree with this, but the active dialogue, the CFTC has been a fantastically engaged regulator on this front. I've been very fortunate to be a part of the CFTC's Technology Advisory Committee and the Virtual Currency Subcommittee. This was the TAC, as organized and operated by former Commissioner Quintens for many years. There's been a multi-year focus and conversation on this. It never happens as fast as people at a startup developing perhaps outside of a regulatory framework want it to happen, but it's been happening. And now we have engagement. And I know people may not like all that we have engagement on the SEC side as well too, but it's engagement, it's a dialogue, it's a conversation. All these things are coming together with the interest and with the demand from institutions and individuals at this point in time that this transaction makes sense, because we do have the tools, we have the licenses, and now we have additional resources and the backing of Cboe to help push this forward at this very special point in time.
It's something I always think about too, in the sense of you also need to have a buy side kind of catalyst or an investment thesis for why these assets are interesting to hold. And so I guess you could argue that back in 2014-15, it just wasn't clear that Bitcoin was a digital gold proxy, and kind of the overall investment case for owning crypto assets in an institutional context probably just wasn't as strong back then.
Yeah, like we don't need to have like a economics discussion here, but I think one of the other things that are happening at this point in time are obviously the massive infusion of fiat into the economy has caused everyone to look around and say, what can I do about that? Because I don't like the inflationary effects of all of that. And having programmable money, having a fixed supply, at least in Bitcoin, those are great attributes of a positive answer to that what do I do question. So I think certainly capitalizing on that is helpful, but it's not the only factor driving it right now, in my opinion.
Chris, as you mentioned, CBOE has been very active in this market for a while. Why now in terms of the further advancement and going forward with this transaction and moving into the space in a much bigger way?
Yeah, I think I'd echo a lot of what Tom said. There's just a confluence of events that make this an inflection point in this asset class where it's coming to the point of legitimacy. I mean, Cboe is actually was the first exchange to have a Bitcoin ETP filing back in 2016, and then that was disapproved at that time because they said, well, there's not a sufficient liquid regulated market to base it upon. And here we are 5 years later, and so we've taken a keen interest for many years, in addition to the cash settled Bitcoin futures. So, but it's the confluence of events that Tom talked about. And I do think, the macroeconomic events of the last couple of years and the massive increase in money supply is driving, bona fide interest from, I guess you would say, investors that normally wouldn't have taken an interest in this asset class are looking for an inflation hedge. They're looking for inflation protected assets, and those are somewhat hard to find. So, and then, should there be an ETP approval this week, as it appears there is or will be, that will open up a whole new vein of access to investors in a very interesting way. So it's a fascinating time in this asset class as the real demand from customers, and then the real adoption from institutions. And that adoption from institutions, I think we found as we were talking to those institutions and different players, as you can read about in the press release, the amount of interest was actually overwhelming to us about how much they agreed with our vision for this asset class and how much interest they have in helping shape and define it.
I'd add one other thing too, if I could. It's very popular to talk about the decline of U.S. supremacy in capital markets and other things because we're so slow and everyone's moving faster and we can't get anything done here. I think I bear something in mind. When I reflect upon my experience in traditional TradeFi, which I know is probably a bad thing for some listeners, but when I reflect on that experience, when I was global head of quantitative prime services at Barclays, I dealt primarily with systematic trading fund managers, primarily different arbitrageurs that had different types of strategies. And those funds operated globally. They traded everything globally. We offered access to 100 plus markets. It was an amazing platform. but that gave me a lot of data to look at, a lot of insight. And those assets, were deployed globally, but the decision making around where those assets were deployed were made here in the U.S. In some cases, over 80 some odd % of those asset deployment decisions were made in the U.S. for a globally traded product. So I'm not saying that crypto doesn't rewrite that, and perhaps that balance doesn't shift back in another way. But I also think that it makes a point that there's a massive amount still of influence on how portfolios are allocated for institutions and the advice given to individuals that come out of the US. So, everyone likes the tech analogies. The last time I checked, oftentimes the 2.0 version of something outperforms the 1.0 because it doesn't have the anchoring concerns that the 1.0 platform has. And I think this is a bit of a 2.0 moment for the US. And when we enable all these customers coming through these more traditional channels to access these assets, I think people will see the power that the US market brings to bear in other assets that will bring to bear in crypto markets as well.
It's a great point. And I know you and I could talk for hours about how some of this technology could really be a key enabler for the U.S. foreign policy interests. If you look at stable coins and you look at some of the things that are possible here. So it's great to see the U.S. regulators starting to lean in a little bit more. Chris, I want to build on something that you mentioned at the end, just around the partners and how this is actually going to be brought to market. So I guess question for either of you, could you talk a little bit about the partners, who else is involved in this, and what's the go forward plan?
The partners are broad-based partners. Yes, you have crypto-first partners, partners like Galaxy and NYDIG and others, and you have retail firms like Robinhood and Webull and other firms that you can see in the press release, and then even some sell-side banks that you saw that Goldman Sachs was quoted in the press release, and other traditional firms, more traditional firms like Fidelity, like who has been long embracing this, but historically has been part of the original financial services firm. So that's what I was talking about, in that the amount of interest in helping us with ErisX define this new asset class in a way that appropriately embraces regulation but brings trust and transparency has been tremendous. And they're going to be part of a digital advisory committee, but also a certain subset of them through syndication will likely be putting in equity interests here to help us define this market and have a keen interest in helping us grow not just the spot market, but the derivatives market and the new products we can launch as a result of that.
Tom, this sounds great, and obviously it sounds like the original sort of go-to-market strategy here. So from your perspective, talk a little bit about this strategy versus the original strategy.
Yeah, well, I think there's definitely a lot of parallels to it, right? History doesn't repeat, but it rhymes. And I think that in this case, for all the things we've talked about here about why now, a lot of these firms are recognizing the why now. There's a lot of introspection going on now on what is good market structure. How do we know we're getting the best price for a customer? How do we build a market that's surveilled and looked after by professionals with good regulatory relationships that can provide the explicit and implicit assurance that people need? I think a lot of what we did at ErisX when we said, hey, there isn't a great market structure for spot markets, but there's a great market structure for derivatives. So we're going to set up a derivatives market. And by the way, we're going to copy paste that rule book and run that for spot. If I were to have our chief commercial officer on right now, John Denza, he and I would tell you about how many times we've had to explain to people what that means. And they said, well, why did you do that? And why is that important? I think people have just come to it now. So, I could look back and say, well, gosh, we came up with this idea in 2018. Why now? Quite differently, I say, yeah, we came up with this idea in 2018. We put our back into it for the last 3 years. The timing is right for all the reasons we've talked about. We have a fantastic partner here with Cboe that sees it the same way and wants to help give us the rocket fuel we need to get moving. And these partners are all part of that story. Being right early is maybe a moral victory. Being right with the right group of people at the right time is a better place to be, in my opinion. So there are a lot of parallels, but things have changed, and those things that have changed are very positive about the interest in the partners. So great, we're ready to go. The table is set. Come on in. Dinner's going to be served. So we're excited to get the people in.
And when you guys think about partners, obviously in any marketplace business, getting partners on board early to build up the market makes a lot of sense. But what else do these partners bring to the table?
These partners bring not just, obviously they bring incredible amount of expertise from different markets they've been in, different experiences they've had. They also have their own, a lot of them have their own crypto businesses, and they may find ErisX to be the place, or Cboe Digital to be the place that they want to transact, because it's the most trusted, transparent place with the best data they can find that helps them facilitate their trading. Given the history I have with Bats, helping found Bats in 2005, we've seen this story play out many a times, but especially, in my history, having those partners from the beginning that help shape the exchange, shape the market with us, and could guide and direct us, not just with order flow, but guide and direct us in how we can define the market in a way that's beneficial for all parties was vital. And I expect that they'll help us with advice, with order flow, and really with helping define the regulatory landscape as well, which there's so much unknown right now. There's so much confusion, and bringing clarity to what is confusing now will be vital for this asset class.
I'd throw out two other things too, if I could, Matt. The first would be that back to that 1.0, 2.0 analogy, crypto from the early days has been all about vertical integration because the providers had no choice. And what that sets up is a path for a bit of conflict, right? If you are a retail broker dealer, you're an intermediary, and you want to provide access to crypto for your customers, it's a little bit challenging if one of your sources of liquidity is a firm that is really in direct conflict with you in your attempt to solicit customers and provide them services. And if they're not in conflict today, they'll worry that they might be in the future. The construct of what we built at ErisX, and if you look at what Cboe does, is they service investors globally across multiple asset classes. Is it's an exchange, and now we're an exchange and a clearinghouse. That's a very defined role, and a role that is not in conflict with that of intermediaries and others looking to source liquidity. So I think there's a place in a proper regulatory structure for what each entity does, and it allows each entity to really focus on innovation in what they do well, as opposed to vertically integrating and attempting to own the whole stack. I think, unlike a pure technology play, most regulators aren't looking for that whole vertical integration because it lends itself to other challenges over time that we've seen play out at different points in time in history. The other thing I'd say is, Chris talked about his time at Bats and the innovation that they've seen. If you think about some of the players named on the partner side as well too, some of them have seen the evolution from pre-electronic trading to fully electronic trading. They have the benefit of taking a long-term view of how to catalyze generational shifts in the use of technology and investing. And again, I know it's not the speed of crypto Twitter about everything should be done overnight and that's the only way to do things. I think you're going to see an enormous number of participants enter the market because these intermediaries are now going to have access to a market like ours in a way that they desire, and they're going to be able to flex their strengths in building out platforms and products that they want to offer their customers, and they've done it before with other asset classes.
It's a really interesting point on competition, Tom. And so if you think about the basis for competition for brokerages and exchanges in the crypto space to date, I mean, you have spot versus derivatives, you have competition just based on the types of assets that are offered. Some exchanges or brokerages offering much longer tail exposure, some offering Bitcoin only. How do you think about competitive landscape going forward given this transaction?
Oh, wow. I mean, I think others are going to be hard pressed to match what we're doing, right? So hats off to the ErisX team on the product innovation side, right? I know we haven't hit it out of the park in futures with volume. Happy to talk about why that is, but we were the first to get a physically delivered Bitcoin future approved. We did a huge amount of the yeoman's work in getting ETH approved. We have a lot more in store beyond simply cash settled versions of cryptos and what have you. We've been thinking about the ecosystem. We've been thinking about miners. We've been thinking about hash rate. When I start to think about all those products and I reflect back to my time on the sell side, if you have the spot market, if you have the derivatives market, if you have these other derivatives that relate to the broader ecosystem of everyone involved in crypto, you now start to have the bases to build structured products and unique products for your customers. So whether that's in fund structures that people can access, and there's certainly funds out there today where you can buy or sell volatility in a fund. That's a complex thing to do in a fund, but those products exist. If we now have all these things, spot exposure, derivatives exposure, things like mining difficulty futures or hash rate swaps or what have you, now you can build really interesting funds, but you can also do customized products for your customers who want a specific exposure or cash flow or what have you. I don't think anyone's going to be able to offer the potpourri of what we're going to be able to offer, and is an effective way on an efficient platform with the transparency, surveillance, and regulatory auspices that we can. It's going to be really tremendous, and that's what excites me about what comes next.
Chris, how did you think about that from your perspective when you look at the competitive landscape?
Yeah, I think I'll just harp back to what I mentioned at the beginning, which is just the uniqueness of the ErisX asset is that you have spot data, derivatives, and clearing all in one, which allows us to do the things that Tom mentioned about with new product innovation. If you think about also, we have many filings with ETP issuers that they're trying to get approved and listed on Cboe's listing exchange. So it could open up potential new listing opportunities as well for us across other businesses. This just uniquely positions us in this space. I think in comparison to the competitors. If you also think about it, also fits so well with our strategy at Cboe. If you think about, we have this virtuous cycle for us. We try to get into the spot market first, the most competitive place, and we think we're efficient, can really win there. That creates a bunch of data that helps drive the market, fuel the market. Then we go to derivatives, and then eventually we go to clearing. If you see what we've done in other asset classes, I'll use Europe as an example. We started in this, spot equity market, but we bought a clearing entity. We've gone to derivatives. We have great data there. Well, that's a virtuous cycle for us. Well, with ErisX, we do that all in one to create Cboe Digital, which gives us that unique competitive position. And I'll echo what Tom said there on being unconflicted. Our goal, our strategy is not disintermediation here. We do want to interact with customers, but we don't view intermediaries as a hindrance necessarily. We think they have some unique benefits to offer to customers, and we want to access as many people as possible, but recognizing that we're not going to do that completely on our own.
It makes a lot of sense. It's great to hear crypto assets in the context of broader asset classes that CBOE has been so dominant in over the years. What will it take in order to put this product in market from a regulatory approval perspective, Chris?
Tom's mentioned a lot of this is, we need CFTC approval of this. Obviously, we're the futures market and the clearing entity is under CFTC regulation. There's a whole bunch of state approvals as well, 40 plus state approvals that we'll need to go through, which is why we've said this. We expect this to close sometime in the first half. There's just a natural life cycle that we need to go through for those approvals.
That makes sense. Well, I wouldn't let this opportunity go by with two experts on the call to talk about exchange traded products in the crypto space. And so would love to just get both of your perspectives on sort of where we are right now as it relates to exchange traded crypto asset products, specifically around Bitcoin futures, ETFs, and where we're going, what this combination unlocks potentially for that category. Maybe we could start with you, Tom Chippas.
Sure. And this is where the fun of when does the podcast get released, when do people listen to it, and what's happened sort of intersect. I mean,
assume that we have a futures ETF, maybe. I don't know.
Yeah, I don't know. One with a fun ticker symbol as well, too, maybe. But look, our COO Matt Trudeau wrote a really great piece on our blog about the virtuous cycle that'll get created as these products come out. And it's a reflection upon a number of factors, but the primary one being that when you create these products, there's a process that kicks off, and that process involves the market makers that are actually making the markets on these products, whether it's an ETF or an ETP or what have you. They have to acquire the underlying product, and they need to hedge the exposure, and they essentially go through what's called a creation and redemption process. That process is going to kick off a lot more trading on the spot side of things. It's going to create a lot more access to people that otherwise couldn't access the spot market by manufacturing the derivative product. And by derivative, I'm not referring to a futures contract under the Commodities Exchange Act. I'm referring to something that is basing its price off the underlying spot market there. So in the generalist context. So I think that whether the market starts off now with a futures-based product, I think that's a great start. I think pointing to a cash-settled index is not a bad place to start, but it certainly isn't the ultimate destination. I think being able to have products that are backed by and priced off of the underlying spot market is a superior place to be. Let the futures market do what it does, which is sort of set the forward price. There are products today in the equity space and others that utilize futures, and they're fine. I'll let academics discern whether or not those products are good indicators or not so good indicators of price. But I think if we start off with the futures-based ETF to now, great. There's a lot of pent-up demand. Let's get the products out there. Let's learn. Let's see what people want. Let's let regulators get more informed and ask more questions. But I think the direction of travel is very clearly to having those products underpinned by the spot market.
Chris, what would you add to that?
Yeah, just maybe a bit of history here. Obviously, with Cboe's history, we're well known for VIX. The VIX index was first created, and then there were VIX futures that were created. But really, VIX futures didn't start trading very much at all until there were VIX-based ETPs. And with that new access method, there was a lot of this virtuous cycle that Tom talked about with any asset class. Is really when VIX started taking off, and there were VIX options, and that took about 17 years before it really happened. We think that
only
that long, but I think the cycle will be much shorter. It may be still measured in a year or two or something like that, but as Tom said, this is a good place to start. Futures-based ETPs are a good place to start, but having ETPs based on the underlying ultimately. Once we've learned, there's already filings before the SEC for those sorts of ETPs. Some issuers that we're working with have them. So we want to help those issuers and fund managers with regulators define this market, and it's coming. But let's learn and move as fast as the regulators allow.
That makes sense. And I guess we're just talking about Bitcoin for now, but do you envision that other assets will follow the Bitcoin playbook as it relates to these approvals and how they're understood by the regulators?
For sure. They have to.
Yes.
I mean, again, I'm very proud of the work we did on Ether to get that approved. There's so many other assets out there that people are going to want. I mean, again, we're dating ourselves here, but I just saw, for example, Grayscale's launching a Zcash product, right? That was not on my bingo card. So it's great to see that innovation happening without a doubt. It's certainly going to be less than 15 to 17 years, and there's certainly going to be more than just Bitcoin and ETH. Those two things I'm very certain of. Really out on a limb with those, but yes.
That makes a lot of sense. And will you guys still plan on offering margin on futures as part of this new combination?
Absolutely. Absolutely.
Yes.
Yeah. I mean, I think that's part of it for us, Matt, right? We've been pushing on that. It's a process we've been going through the CFTC. I think rightfully so. Now that with this transaction out there, the construct of who we are and how we go about offering that and the resources to do so are going to look a little bit different. And I think they're all very, very positive. So we're looking forward to, engagement with the CFTC on that dialogue we've been having and refreshing it for, how we look now as part of Cboe Digital.
Tom, I guess as we move to wrap it up here, I've been lucky enough to be along for the ride on this ErisX journey with you. Curious just to get your reflections on the road. And there's been a lot of, speed bumps. There've been a lot of great moments. There've been a lot of people that we thought were going to connect that didn't connect. The timing was faster in some ways and slower in some other ways. Just general reflections on the road and then the road ahead.
Well, even a flight to a holiday destination might encounter some turbulence, but you're happy once you're on the beach with a lei around your neck and a drink in your hand. Not to suggest we're on the beach because we're not, but it's another chapter in the book, without a doubt, a book that hopefully no one reads, but in my mind I'm writing, which is that, it never works out exactly the way you thought it would. certainly had our share of challenges. There were some people that thought they would be there early, and the people with their hands on that project did everything in their power to try and get there, but things beyond their control interceded. And for that, I'm disappointed, but I don't blame anyone because it's not their fault. They did great work, and things they don't control came up. I would say that what I'm most pleased is that by and large, the ErisX team is intact. We've had a little bit of turnover in the 3 years, but by and large, it is that core team. We have hanging in our office an ErisX hoodie, and on the day we launched the spot market back in April 2019, everyone that was there signed that hoodie, and it's framed and it's hanging up in our office, and we have a little CD in there of the 1.0 version of the platform, the source code for that hanging in there as well too. And I think the thing that I'm most proud to reflect upon is how the majority of the people that signed that hoodie are all still with us, and those that haven't are still friends of the firm. And life happens, and people move on and do things for different reasons. So I'm going to focus on that it's a tremendous team that's put its back into everything we've done. And when we've had to pivot and change, we've done it. But we're here now, and I'm super excited that everyone's coming along for the ride, and that they are excited about what comes next. So I'm really proud of all that, and proud of the team, and that's what I'm going to take away from the last 3 years is what a great group of people we have, and that's what's enabled us to do what we've done.
I love that. And Chris, maybe I'll end it with you. I think this transaction and this move by CBOE has the potential to be one of the biggest inflection points in the crypto asset financial services community. It's the type of thing that you could imagine looking back 20 years from now and saying, well, that's really when the space, hit the gas pedal. So what are you the most excited about as you move to close this transaction over the next year?
Well, I think you're right, Matt. I think this is market defining. Potentially a decade or two from now, we'll look back at this and say this was the inflection point, given all that's going on. And I will echo what Tom said there. I think we feel like this is the realization and the expansion of the original vision of ErisX now as part of Cboe Digital, because frankly the market's ready. All the intermediaries are ready. The stars have aligned. Timing plays its part here. The time is right for us to enter this market, to bring trust, transparency, and data to a market that wants it in a regulated way that is appropriate, with a team that is fantastic and committed to the mission and vision of Cboe Digital, and frankly, Cboe as a global company. I mean, our purpose is to operate a trusted, inclusive marketplace around the world so people can define sustainable financial futures. Like that's what we do. And so this fits so well into who we are and what we do every day, just in a new asset class with a tremendous team that, as Tom said, we're excited that they're coming along for the ride and going to help us do this together. If you look at our history at Cboe, and I guess I'm living evidence of it. I didn't start at Cboe. I came to Cboe in 2017. I was one of the founders of BAT. So we have a history of being able to keep a large portion of the people through transactions because we want it to be an entrepreneurial place to work, where we get to define markets, not just fight for market share, but we get to define new things and grow them for the betterment of investors around the world. So hopefully you can sense my genuine excitement here about helping define a brand new asset class and take it to the next level.
Well, that's awesome. I think that's a great place to leave it. This is definitely a super exciting day for CBOE. It's a super exciting day for ErisX, but it's also an exciting day for the industry. So thank you both for coming on the podcast, breaking some news this morning.
Thanks, Matt. Thanks for having us.
Thank you, Matt. Appreciate it.